Are you ready to make your first investment but only have $100? Don't worry, you're in the right place. In this video, I'll show you step by step how to start investing in 2025, even if you are a complete beginner. We will cover what you need to know, where to invest, and how to make that $100 work for you. Let's get started. Investing isn't just for the rich, it's for everybody who wants to grow their money over time. Think about it. If you keep $100 in a jar, it is still $100 next year. But inflation means it's actually worth less because inflation is eating your purchasing power. And keep in mind, there is no inflation, it's currency debasement. The government and the central banks keep debasing the currency, stealing your purchasing power without even you knowing it. On the other hand, if you invest that $100 and earn 7 to 8% returns, it can grow year over year considering the compounding effect. For example, imagine earning 8% annually. That $100 could double in less than 10 years without adding a single extra dollar. Stick with me until the end because I will share you my top tips to avoid beginner mistakes and set yourself up for the success. Now, before you start investing, ask yourself, what is your goal? Are you investing for retirement, planning to buy a home, or just want to learn how to grow your money? Setting a goal will keep you motivated and focused, and you can track your performance over time and then adjust your goal accordingly. Also remember, investing is a marathon, not a sprint. The goal is long-term growth, not quick wins. So if you're looking to double your money overnight, then try your luck in casino or buy a meme coin like Fartcoin. Here is a simple tip. Start with a goal that excites you, like turning your $100 into $1,000 within a year. Stretch goal, but it's good to start with. Let's talk about the options, okay? Where can you actually invest $100? Here are the 5 simple ideas. ETFs, exchange traded funds. These are the baskets of stocks, low fees, diversified, and beginner friendly. Like if you don't have time to kind of track different stocks, measure their performance, doing technical analysis, then just buy a single ETF and sleep over it. Like S&P 500, for example. It has been producing between 8 to 10% for the last 10 years annually. Number 2, fractional shares. Platforms like Robinhood, Moomoo, or Wealthsimple allow you to buy a fraction of expensive stocks like Apple or Tesla or Google, right? So you don't have to have $1,000 to own a piece of great company. Number 3, robo-advisors. If you're busy in your job, in your family, and you don't have time to keep analyzing different stocks and then move your money one stock to the another, you can basically use robo-advisors like Wealthfront or Betterment. Handle everything automatic. I don't have a strong opinion about that because I haven't used them myself, but there are some people who are using robo-advisors or robo-traders to manage their portfolio. I think for a small amount, it's not that risky, but if you're putting a large amount, you should take precaution. Number 4, high interest savings or GICs. If you want a low risk option, these are the safe places to park your money while earning some interest. For example, if you have $100,000, but you know that that $100,000 has to be spent in something in the next 6 months, then I would personally not invest into stocks because if I invest in stock and stock goes down, then it's not liquid for me. So I will put that money into fixed income assets like GICs or other high interest savings accounts so that I can take the money out whenever I want to use them. Number 5, crypto for the risk takers. Consider Bitcoin or Ethereum, but remember, these are highly volatile investments. Okay, invest cautiously. All of these options that I mentioned, these are long-term investment options. Don't think of an overnight strategy because that's not what it's all about. Short-term trading is very risky, very volatile, and it's not really investment. It's basically casino. Okay, now you know where to invest. Let's talk about the tools to get started. There are a lot of brokerages available to start with like Moomoo, Wealthsimple, Questrade, but the platform that I like is Moomoo because the platform is very user intuitive, very simple to use, and they provide the best FX rates for you to invest into the US stocks. Plus, they give access to advanced tools free of charge, which are typically paid options in other platforms. Plus, if you're not investing, you can earn 6% return on your cash deposits, which is fantastic. So if you are new to investing, there is a link in the description below where you can start and getting $50 free credit by depositing your first $100. And you can use, TradingView or Yahoo Finance to do the technical analysis. But then if you use Moo, you will get access to the advanced tools anyway, which is free of charge. Number 3 is education. So get yourself educated. Videos like this one and other podcasts, keep watching them, understand how the money works, understand how the investing world works, understand how the banking system, the financial system works, the overall macro picture. This will take time, so don't overwhelm yourself. Learn something every day, build your knowledge and momentum, and then by the end of 2026, you will be a different person when it comes to investing. Okay, let's wrap up some quick tips for success. Number 1, automate your investment. Set up recurring deposits so that you keep investing without thinking about it. If you have a firm belief on something that is going to win the next 3 years, keep DCA it. If the market goes down, buy again. Okay, if the market goes down, buy again. If the market further goes down, buy again. So over time, you DCA it, which will bring your average cost down. When the market bounces back, that will be your potential. Reinvest dividends. So if you're earning dividends, you can set up in your brokerage to automatically reinvest them into the stock. So that will help you to do the compounding effect. Number 3, avoid FOMO, fear of missing out. This is the worst investment strategy you could follow. Avoid it, stick to your plan, and avoid chasing hype stocks. Number 4, never invest money you cannot afford to lose. Investing involves risk. So you only invest what you are comfortable with. So if you have $50,000, but that money is going to be used for your kids' education in the next year, don't invest that. You can put that into a fixed income asset like GICs. That way your principal is protected and you can liquidate that money in a short term. But only invest into stocks or crypto the money that you are afford to lose. So ask yourself, what happens if your investment goes down? Is it going to give you a heart attack? If the answer is yes, don't invest that. If the answer is no, then you can go ahead. And there you have it, guys. Investing doesn't have to be complicated or expensive. With just $100, you can start building your future today. If you like this video, give me a thumbs up and subscribe and put your comments down below, and I'll see you in my next video. Take care. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into their professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids, and let me know what you think about that. Let's get back to the video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.